Do you know how much how much capital I've invested in Bitcoin at this point, Raoul?
No.
$3,335,000,000.
Welcome to Dream Richer. Could Bitcoin ever hit $2 million? That is the big question on everyone's mind right now. The price of any cryptocurrency can be determined by using a simple formula. If we want the price of one Bitcoin, simply take the total market cap of the coin and divide it by the current circulating supply. As you can see from the formula, the biggest factor that dictates the price of a coin is its total market cap. Think of this as the popularity of the coin and how much money is flowing into the asset. The larger the coin market cap, the higher its price. Today, Michael Saylor explains what needs to happen for the market cap of Bitcoin to increase, so one Bitcoin can hit $2 million. This is not the first time Saylor has made such a price prediction. He has even gone as far as to say that we could see a $5 million Bitcoin in the near future. Michael Saylor argues that the past price increases in Bitcoin are nothing compared to the price rises we are yet to see. And there's a very simple reason for that: large institutes and mass crypto adoption. Once this large adoption takes place, Mr. Saylor argues that a $2 million Bitcoin is inevitable. If you find the video helpful, then don't forget to subscribe. Let's get right into it.
If you want to see Bitcoin go to $10 million a coin, then it won't come from 125x or 20x offshore levered contracts and traders. It will come from insurance companies and macro hedge funds that have capital, $100 billion of capital, and they just allocate 5% of it to Bitcoin forever. And when you start getting 5% allocations forever, then you'll start to build a monetary base and a capital base that will drive the industry. So I think in general, the bullish developments of the past 12 months have been institutional adoption of Bitcoin, and that has come in the form of the companies, the Squares, the Teslas, the MicroStrategies, the Marathons, the Riots of the world that are actually in the space. Do you know how much capital I've invested in Bitcoin at this point, Raoul?
No.
$3,335,000,000.
That's pretty spectacular.
Okay, so one person.
Yeah.
But I didn't have $3,335,000,000 in my piggy bank when we last spoke.
Yeah.
Now, what happens if more than one person does this, Raoul? How many people does it take, right? And the answer is you need public entities, and they need to be creditworthy, and they need to be able to file a registration statement. You know, if you can file a registration statement, you can tap the fixed income markets, you can tap the convertible debt markets. So what we've seen over the past 12 months is we've seen the creation of public securities. A lot of people can buy, $500 million worth of Marathon stock or $100 million worth of a Bitcoin mining stock, but they can't buy the Bitcoin.
Yeah.
They can buy the convert, they can buy the equity, they can buy the junk debt. But they can't buy the Bitcoin. And of course, people in the crypto industry, the crypto traders, they don't understand why, right? There's still a group of people that think, oh, well, you need to buy it and put it in cold storage and keep your keys, which is, what would I call it? An ideologically pure approach to the industry, which works for a subset of people. But when I'm talking to a guy that runs a $2 billion portfolio, if he went to his boss and said, I want to buy $25 million worth of Bitcoin and hold my private keys, he would get, between laughed and fired, right? That's not happening in 1,000 years, no matter how hard. On the other hand, the guy can go like, okay, so yeah, this is good. So what was the interest rate again? 6%? Okay, I'll take 25 million of that. Next. He's got another deal to do the next day. So I think that what we're seeing is the maturing of the industry, the maturing of the asset class.
In the words of Michael Saylor, Bitcoin is maturing as an asset. In one of his tweets, Saylor described Bitcoin as a swarm of cyber hornets serving the goddess of wisdom, feeding on the fire of truth, exponentially growing even faster, smarter, and stronger, behind a wall of encrypted energy. These technological advancements, along with Bitcoin regulations coming into play, are sure to catch the eye of large investment firms. As Saylor argues, if large investment firms with $1 billion at disposal even invest just 5% of their portfolio into Bitcoin, it would see significant price rises overnight. Just within the last 12 months, several publicly traded companies have taken up Bitcoin. One of these notable companies is Tesla, that now holds 48,000 Bitcoins, followed by many others. According to Saylor, many more are yet to join, which is good news for all Bitcoin holders right now.
I don't know if you saw, Fidelity just went before the SEC. This is Fidelity. This is Fidelity for the last 60 years. They have like $10 trillion of assets under management, and there are companies that have been doing business with them for 50 years or 30 years. Fidelity goes in front of the SEC, and they give a 20-page presentation on why Bitcoin is mature and why it's time to approve a Bitcoin ETP in the United States. And there's a lot of institutions that they will take $10 million chunks and $50 million chunks of this stuff once there is an ETP of sorts. And roll the clock back 18 months, none of it. To be clear, I think there are two structural catalysts that will drive an acceleration of the industry and of Bitcoin in particular. One will be the availability of broad-based ETPs in the U.S. capital markets. Yeah. That will be a big one. And we're watching that right now. It's a process. The second will be the normalization of accounting for Bitcoin as a financial asset. Right now, Bitcoin is an indefinite intangible asset. When we roll the clock back 24 months, you couldn't find a publicly traded company that had $2 million of this stuff on their balance sheet. So if you're a bunch of accountants sitting around analyzing it, you would say there's no compelling need, right, to normalize this. No one's got $100 million of this stuff, right? There's $100 trillion of credit instruments, and there's $2 million of Bitcoin. So I don't think we're going to focus on this. And I understand that. But indefinite intangible accounting treatment says you can mark it down, and you have to mark it down to the lowest bid you can find on the exchange at any minute of the day since the beginning of when you own the asset. It's like I bought a collection of baseball cards for $1 million, and I have to go to everybody I see at a party for the rest of my life and ask them if they'll buy my baseball card collection for a number. And if they tell me they'll give me $1,000, I have to mark the baseball card collection down from $1 million to $1,000.
Ludicrous.
And if someone else, if Bill Gates offers me $1 billion for the baseball card collection, I'm still carrying it on my books as $1,000. So it's prejudicial, hostile, accounting treatment.
It's clear from Mr. Saylor's explanation that Bitcoin is one of the best investments right now because it could see large upside movement in near future. Publicly traded companies like Fidelity, Tesla, and Square are just a few companies that will be followed by many others looking to invest into Bitcoin. As Michael Saylor argued, this Bitcoin adoption has only taken place in the last 12 months. Before that, Bitcoin saw strong criticism. In fact, Warren Buffett went as far as to call Bitcoin rat poison. Charlie Munger, an associate of Mr. Buffett, also showed his strong dislike for Bitcoin in the past, calling it a venereal disease that needs to be banned. How do you think Bitcoin will perform in the long term? Do you agree with Saylor's prediction? Let us know in comments below. To learn more about the latest crypto news, watch these videos here.